it's my mission to leave a positive, lasting impact in the community and in the world.
Welcome to Alt Investing Made Easy, where we explore the complex world of alternative assets. I'm Roland, a securities attorney, investment advisor, and your co-host.
And I'm Sarah, an investment advisor and corporate attorney, and your other co-host. We'll guide you through real estate, private equity, and more, making complex topics accessible.
Tune in for insights that empower your financial journey.
Let's make alt investing easy, one episode at a time. Hello, everyone. Welcome to Alt Investing Made Easy. Thanks for joining us today. Today, we have an interview with Ben Kogut of Rooster Equity. He's the founder, and he's here to talk about what Rooster Equity does and also some other things that are relevant topics in the funds world. Thanks for being here, Ben.
Yeah, thanks, Sarah. Honored to be here with you and Roland.
Yeah, thanks so much, Ben. It's great. We've been trying to get this on the schedule for a while, and you had a trip out to the Best Ever conference, and maybe we'll talk about that. But give a shout out to Roy. Roy's our friend Roy Mullen introduced us, and I think he's recuperating or getting ready for a kidney donation surgery. So we wish him all the best in that. Prayers for Roy and his speedy recovery, and just so grateful. I know that like attracts like, and just that spirit of generosity and open-heartedness. I've always got that sense from you, Ben, as well. So it's great to have you on. But Ben, tell us a little bit about Rooster Equity and your investment focus.
Yeah, I founded Rooster Equity about 2.5 years ago, and our focus is investing in deep value, triple net commercial real estate projects around the United States. We have been, well, let's see, a little background on me real quick. So I started as a broker selling triple net properties. Then I took some money and I invested as a passive investor in someone else's syndication back in 2017. I was looking for some passive income, and the person that I invested with ended up recruiting me to become his head of capital raising. So I raised about $110 million from around 200 investors. We bought around $350 million worth of triple net commercial real estate from 2017 until 2022. And so I really learned what it is to syndicate. So the formula, every single deal we would, go out, we'd put together marketing materials, vet the deal, and then we would have every single deal would have its own PPM and all the individual documents that go with those particular deals. And then it came time for me to do what I've always wanted to do, which is to start my own company. And so I started Rooster Equity. At Rooster, by the way, so my last name is Kogut. Kogut is a Polish word that actually means rooster.
Oh, okay.
So
that's cool.
There's the connection there. And, I didn't want to call it Kogut Capital. And, I didn't see anybody else in this space using the rooster metaphor. And so, we have a little bit of fun with it. And, it's a serious business, but also life is fun. And so we like to attract investors who understand that, you got to have that balance. And so,
So the Rooster's the wake up call, right? So wake up and invest in Rooster Equity.
And don't put all your eggs in one basket. I mean,
roosters don't have eggs.
Well, it's related. You get it.
Chicken.
Cock-a-doodle-doo, all the good stuff. And so my background was I learned that every single deal we could syndicate on our own. And then as I started my company, I did a lot of research, and I was trying to figure out how can I do this, but do it scalable, because there's quite a bit of expense on the front end when you're trying to put together a syndication. And if the deal isn't big enough, it's hard to justify doing that type of expense. Now, I'll say I have learned in my experience, it takes just as much work to do a $10 million deal as a $1 million deal. So that's okay. But anyways, so what I discovered, and we could talk about this to the extent that I can, I ended up going with this company called Avestor. And Avestor had a novel approach to raising capital. And what they call it is it's called a customizable fund. And so I'm not a lawyer. I don't pretend to be one. I'll leave that to the professionals. But my understanding, and I'll try to explain this, is that um, I have a sunk cost up front. We spent a lot of money. We put together a PPM that I would describe as the most umbrella PPM that you can imagine. And then each deal has an individual deal disclosure. So the deal disclosure is very specific to the deal. And so, there's a lot of legalities around. I don't have to explain this to you guys, but what I learned is, I want to be really extra careful about when I raise capital, because I wanted to be able to scale my business by partnering with other, either we syndicate our own deals, or I know a lot of people that have a great deal. They just don't have the network or the skill set or the time to go raise capital. So I have a lot of people calling me, say, "Hey, Ben, I got this great deal. Can you bring some equity into this project and we'll partner up and do this deal?" And so one of my favorite things is raising capital. I like teaching people about triple net commercial real estate. I think this is a alt investing podcast. I think that personally I'm very biased, but I think that triple net is the, best bang for the buck type of investments. And we could talk about what I've seen out there, but I think that, with the Avestor platform, it allows me to bring people into my projects. It has, an online platform. And again, I'm not trying to sell Avestor, but I just wanted to kind of talk
Sure.
to you about what I'm seeing. And it's been good. It's not necessarily great. There's definitely some areas for improvement. The user interface, I think, needs some improvements, but it's allowed me to have like a central location online for investors to sign all their documents, to have, transparency into the deal, and be able to wire their funds, and be able to sign
Mm.
online and have an online portal to see at any given time, like, how has their deal been performing. And it's a great place for me to communicate. So it's really kind of taken back when I was at my former company. All these individual components were very cumbersome, like sending out documents and tracking to make sure that all the soft commits and the money coming in. So I wanted something where we could have it all in one place. And so that's been kind of what I've been able to do to scale it up. And I could share with you about the deals we're doing, but I'll kind of pause there.
Well, yeah, and I wanted to note, we were talking just before we got started recording this about Avestor, and it's interesting because I've got another client, Sarah, and I'm gonna, if you don't mind, if I
Yeah,
just
please.
jump in here, I'm talking a lot,
No
between us,
worries.
but um, you know, this other client came to me and said, I want to use Avestor. They've got a customizable fund. And the one way that it was the way that it was represented is that you can go out to the investors, and like in a fund of funds, you can say, well, it's a fund of funds concept, but you have an opportunity to invest in this specific asset through the fund. And that's okay. But it sounded to me like there was a possibility where those weren't adequately siloed underneath the fund, so that if I invest in asset A and then the fund also invests at some point in the future in asset B, and I don't want to be exposed to asset B, there's no way of protecting me from liabilities from asset B potentially bleeding over into asset A. And that was my entire question to them is, wonderful idea having this blanket umbrella disclosure, but in a fund of funds concept, you're investing in a portfolio that the fund of funds is investing in, and you can't really say, well, I only want exposure to that one position. You're going to get exposure to all the positions unless it's set up where each entity, each investment under the umbrella is set up as its own separate fund or series. You could do this as a series as well, but and then you allow the investors to either invest at the fund level and achieve the diversification that the overall portfolio has, or you allow them to invest in the individual assets. But the individual assets, if you have them held under an LLC or a series of an LLC, those would be the issuers of the securities, and you would have a different Form D for each of the underlying assets. But the way that it was described to me, a investor said that you didn't do that because it added complexity. And I don't want to go into their business model too much, but it's a good conversation for us to have about fund of funds generally, because we're in an investor education role here, and people understand that fund of funds is a concept, and avestor is they're doing something in the marketplace. I would just say, and I know too that they have a specific securities attorney that's working with them, so make sure you have a conversation with them and ask them the questions that I just asked, and I actually summarized this to them in an email. I haven't heard back from them yet. I'm sure that they're real busy, but anyway, that's great, Ben. I mean, you said you're focusing your efforts on what you are best at and enjoy the most is capital raising, and that's such an important role in this industry. People going out there and, like you said, education, telling people what the opportunities are. So I'll shut up.
Uh,
Yeah, well, yeah.
go ahead.
Go ahead,
No, no.
Sarah.
I have a question, but why don't you respond to Roland? I have something I wanted to ask.
Yeah, I know that they have. I was told over 500 people that are now on their platform. Um, I don't know the exact answer about how they legally organized it, but I do know that I've dealt with numerous large law firms who have, advised me throughout this journey. And it does seem pretty clear to me that when somebody invests in deal A, that they are not exposed to deal B. So it really, allows us to, it for honestly, like 90% of the investors, like it just looks and feels like a syndication. They're signing documents. 10% of them will dig in deeper, and I'll answer their questions. But it's been helpful for us to be able to scale using this type of tool.
That's cool. So my question was, we hear a lot from people talking about raising capital, and something we sometimes are able to even assist with. But would you be willing to sort of describe what that means? I mean, it may seem obvious, but raising capital, I mean, for some people, it's literally just calling their fraternity buddies, honestly. And for other people, it's a lot more than that, or a lot different than that, or they have, so would you have any like top tips about, what mindset you need for raising capital, what you need to be prepared for?
Yes, love that question. So the mindset is abundance and generosity,
Mm.
and it's a full contact sport. It is at the end of the day, it's relationships, it's education, it's going on podcasts, it's going taking people out to dinner. I started now creating social media content because I didn't see a lot of people talking about raising capital in the triple net space.
Mm-hmm.
Now, multifamily and storage is a whole different story, but I'm a triple net guy. It's what I've been doing for 20 years. And so it's all the above. We do a newsletter, we have a CRM where we're constantly sharing updates. And then, a lot of referrals, asking
Mm-hmm.
for referrals, asking for testimonials, and just ultimately just, trying to do a good job and make our investors rich.
Yeah. Success in in the returns is always a good sign.
Yeah,
Yeah.
exactly. Yeah. So we lean in on that, and then we just keep generosity, just trying to be patient. And, some people need more hand holding than others. And, and I believe that there is an abundant amount of opportunities out there for people.
Mm-hmm.
So, but our niche is we just stay disciplined. We just do triple net. So
Mm-hmm.
to talk a little bit more about that, if you might.
Yeah, for sure.
So we like buying deals that are cash flowing on day one, because it has sometimes single tenant, sometimes multi-tenant, but we have the cash flow. If we buy it at a price that's good enough, we like to be able to pay our investors an 8 pref monthly, and we like to do that right away. So in order to hit that, we have to buy it at a cap rate that makes sense. We also put very low conservative amount of leverage on property. So every component of our deal is designed to be conservative. And so long-term leases are, usually 10, 15, sometimes 20-year leases. And triple net is great because it reduces another risk. We don't have to worry necessarily about, like insurance and taxes that, we see that those are obviously always going up. Um, and so it's just as a landlord, as an investor, it's not that it's not important, but it's not really um, an issue because it's not our responsibility.
Hmm.
So as long as we, invest in deals that have strong tenants, and the way we define strong tenants is we look at the unit economics of the business.
Hmm.
So how many widgets does this business need to sell in order to break even? Can they pay the rent? Because at the end of the day, that's what we're going to use to pay our debt service and pay our investors.
Right. Well, I mean, we've talked to a few other people about the triple net situation, but I think actually just recently, we know another guy up in DFW who's focused on triple net, who started off in multifamily and shifted over. Remember Joseph?
Yeah, yeah, for sure.
And and what I understand is that, I mean, what I find interesting about it is if you're just a regular person driving around your city and you see these different shopping centers, you may not automatically think, oh, that's an anchored tenant, those are tertiary tenants, or whatever it is that you use to classify things. But I imagine for you, when you drive around, that's kind of all you see.
It's so true. Yeah, I love looking around and seeing like what's the tenant mix, what's the ingress, the egress. Yeah,
Yeah.
how do they lay this site out on this piece of property? Yeah, I love it.
Yeah, you must go crazy if you come to Austin because I don't think any of that was thought out necessarily sometimes. There are
There's
anchor
some
tenants, but the
interesting
ingress and
properties.
egress.
Yeah, exactly.
Mm.
Yeah, that's what we do. We live, eat, and breathe triple net commercial real estate, and we're growing our portfolio, and we're growing our happy investor base, and
Hmm.
it's been a lot of fun. We and now, to be honest, we have seen an opportunity to go bigger, and
Mm.
so now actually, I might turn the tables a little bit on y'all. So we're actually thinking about starting another fund
Okay.
that would allow us to raise bigger tranches of capital. Like
Hmm.
we're pretty deep in a conversation with a private equity group who wants exposure to triple net, and they're talking about seeding a new fund, not an investor fund, just well, I'd be curious what y'all would suggest, but we want to start with like a $30 million
Hmm.
tranche and then grow it to maybe 100 plus
Hmm.
for our first fund. And so I don't know. I'd be curious how would you guys structure something like that?
Well, sure. You
Oh,
know that, Sarah, if you don't mind, I'll
go ahead.
jump in and, um, it's really the same thing what we were talking about before. If it's a fund that will have many assets in it, then, if the fund is implementing a uniform or consistent investment strategy, for sure, you've got a really clear, uh, thesis on which you'll be basing your investments, and so something really clear that you can tell your investors, and so that the risk, I want to have a diversified exposure to triple net spaces that have been vetted by these guys that are incredibly well experienced, understanding that I'm going to be investing in a portfolio, and this idea of the fund owning multiple assets. We do have this potential for asset B, bleeding into the liabilities of asset B, bleeding into the assets of the other fund. And this is, let's just put it down. The concrete example is the slip and fall at the retail center, and they sue. They say, well, the property owner, the tenants, whoever, they'll sue everyone. They'll say you provided inadequate drainage, and this was a problem that persisted, and so this is left a high income earner brain dead, and he was a young 30-year-old hedge fund manager and had a lifetime earning potential of $1 billion, and you're liable for that because of that. And so then it's maybe not adequately covered by insurance or whatever. And so we have to sell off other assets in the portfolio to cover that loss. But that's a risk. When you invest in a multi-asset fund, that's a risk that the investor should understand. And, the trade-off there is that they're getting the diversification Or if you wanted to, you could allow for investors to invest alongside the fund in the assets themselves. And so then it's just setting that up and setting talking about, you talked about the total dollar amount that you wanted to raise, and if you wanted to keep that 8% pref, and then understanding how you'll be splitting profits. And then also the important thing for a fund is, thinking about the term. What's your horizon? Are you going to operate this indefinitely, or will there be a specific time horizon associated with it? Will there be an investment period, a commitment period? And just thinking through all those questions. Another important question would be: do you have the right to sell assets and reinvest the proceeds, or if you sell assets, are you going to just automatically start sending cash back to the investors? And there's probably no right or wrong answer to all these questions, but they are questions that you would have to answer, and just in a way that's consistent with your business, how you want to do business.
Yeah, a lot to unpack there. Yeah, that there's a lot of yeah. So how do I get started? Checking those boxes. Would you say?
Well, and Sarah, I'm sorry, I'm talking a lot, but
No, it's fine. It's good.
we'll send you a summary of terms document from a fund PPM, and you can kind of just go through, and each summary box, you've seen these before in PPMs, and you can just go through and say liquidity. Okay. Well, let's say you have to be in the fund at least 2 years, and then you can make a redemption request. We have a right to suspend redemptions in the event that we don't have adequate cash at that time to fund the redemption. We're not going to be required to sell assets to fund redemption requests, but we do try to provide liquidity or no liquidity. It's just like the normal investment that you're investing in the asset, and you're in for the life of the deal. And we have a 10-year or maybe like a 7-year time horizon on this, maybe a right to extend for 1 year periods after that, and the manager's sole discretion. After that, we have to go to investors and get their consent
And
to extend the
just to add in there
term.
for private equity, I think they are used to being locked in for longer. It's a little bit different when you have more not retail investors, but more individual investors who might want more access to cash. For private equity companies, you could talk to them about what it is their investment mandate themselves in terms of how long they can be locked in, and that can give you freedom. And of course, if you have a lock-in period, it doesn't mean that if things go well, you can't pay money back. I mean, you have a discretionary choice on that, but you probably want to get as long as you can out of a private equity fund. I mean, when you go from the point of view of having so much capital that you want to push it down into seeding funds, then you have longer time horizons that you can contend with also. So
Yes, agree. Yeah, the mentality for that fund would certainly be a longer term,
yeah.
um, yeah, hold,
Well,
that kind
their
of
team
thing.
doesn't want to go through the whole ordeal every 2 or 3 years. Like, because the minute you have a right, when you work in a private equity fund, the minute you have a right to exercise a redemption, it has to become a discussion about whether you should or shouldn't. So it's a funny balance, really, for the team. It's nice when things are locked up and on a longer term cadence than sort of annual or every 2 years. So,
Yeah, no, our investors would in that deal would understand that this is a 5 to 7, maybe
yeah,
10 year
yeah.
type of mentality. So we wouldn't want to deal with people that need their money out every couple of years.
Yeah.
Well, the only other thing I was thinking about, Ben, maybe you could tell us about your experience at the Best Ever Conference. That's for sure a thing. People know about that, and you attended recently, and we were
Mm.
talking a little about that. So, just any reflections on that?
Yeah, it was fantastic. I had an opportunity to join what they call the pitch slam, which is a pitch competition in front of an audience of hundreds of investors. And so I was selected out of 72 applicants. I think there was 10 of us or something.
Mm.
Wow, that's great.
And so I got to get up there and pitch a deal that I'm getting ready to launch. And so can I share that deal here?
Oh, sure.
For
Yeah.
sure.
Well, I guess the only caveat would be just 506C, but I think you know about that. So,
Yeah, 506C. Yeah, I won't get into returns right here, but well, I can, I guess, but
uh,
we are under contract to purchase 4 childcare properties in Texas.
Oh,
Hmm.
cool.
And what's unique about this is I'm partnering with a private equity group. It's run by a friend that I've known for over 20 years. And the private equity group has been acquiring childcare properties. They bought about 18 of them so far, mom and pop type of childcare deals. And so they go in there, they don't change the brand, and they get in there. They actually change almost nothing on day one, but they end up implementing systems to be able to improve the cash flow on these properties. And so when they have an opportunity to buy the real estate with the business, that's where we come in. So they're under contract to buy the real estate in the business, but they're going to partner with me. I'm going to raise the capital. We're going to end up buying the real estate. Their private equity group is going to sign a brand new 20-year absolute triple net lease once we acquire the real estate, and at a nice discount to
Hmm.
market, at a below market rent. I've vetted the deals. These properties are already cash flowing and
Hmm.
have one of the main metrics that we like to look for in this particular niche is a 2x EBITDA to rent ratio. So in other words, their cash flow is 2 times what the rent is. So even if their business was to be cut in half, God forbid, they could still pay the rent. And even if
Hmm.
it dropped below that, there's a corporate guarantee that is, by a corporation that has a very strong balance sheet with zero corporate debt. It's very conservatively underwritten. And so it allows us, so we're buying at a price where
Hmm.
we can afford to pay our investors a preferred return starting on the first month
Wow.
and, going forward. So those are the type of little niche types of deals, off market, relationship based. We can get in and create value by drafting a lease that we'd be very happy to own for a long period of time. We're only going to own it probably for 2 or 3 years. Put a conservative amount of debt, and there's a nice spread between the cap rate where we're purchasing it and where we see numerous comps where these type of deals like to trade in the market. So
Hmm.
there'll be cash flow during the hold, and then there'll be a nice pop when we exit. Hope God willing.
Yeah. Cool.
That sounds great, Ben, and
Yeah.
terrific that you had that opportunity to share that investment with the group there, and just from my experience, I mean, we talked about it, and we had a Joe Fairless on as a guest previously, so
Yeah.
we
Yeah.
could put that link in the show notes, and so people, if they want to know more about the Best Ever Conference, it's for sure a thing, and it's a nationwide thing. It's been going on, I mean, at least since 2018, and but that was 8 years ago already. Kind of hard to imagine.
Yeah.
Yeah, I think it was the 9th or 10th annual conference they've had. And so I've seen a lot of people. So I was invited because it used to be more of a multifamily conference, but I think a lot of people are opening their eyes to the benefits of triple net. And so a lot
Hmm.
of my investors have, shifted away from multifamily, and their eyes open up and they say, "What, you could pay us a preferred return right after, the month after we close, and it's a better coupon that, they're getting in other deals." I'm like, "Yes, that's what we can do. And this is how we do it."
Hmm.
Well, all these people, pivoting from multifamily to triple net, but you've been in triple net all along. So maybe like to
Amen.
go with you and somebody that has that kind of experience. So that's really cool.
Yeah, no, it's
So
been fun.
So
Go
just to
ahead.
wrap up, you kind of, I think, already shared some of the things about your mindset, but just personally, like, what is it? I think some of it comes through also, but what is it if you had to, like, a personal motto or what keeps you going when you do all this work? It can be pretty hectic when you deal with commercial real estate.
Yeah.
Um, so would you have anything to offer the audience about
You
what
know,
keeps you going?
I've become more spiritual as I've gotten older. I'm 43 now, and I think that, everything happens for a reason. I think that generosity and gratitude are really what is and believing in a higher power. And so I think that, that just like in the short period we have right there, I think being able to to take care of that. Money is energy, so taking care of people's energy in the best way that we know how, and being a fiduciary, and just some people get nervous, some people are really excited, and just kind of keeping a mentality of indifference. Like it's not my choice whether or not somebody invests in a deal, but it is my opportunity to educate and share with them these opportunities, and let them make their own decisions. So
I love that. That's great.
Yeah, I mean, it's just something that we've talked about here that, and I really appreciate you bringing in the spiritual component to it. There's this philosophy that we've talked about, the five capitals, and spiritual capital is a thing. And that actually is probably the most determinative, um, to the extent that you have that in your life, the whole focus is passing along the blessings that you've achieved financially to your offspring, to future generations, and wanting the wealth to be a blessing rather than a curse. And again, the greatest predictor of that is to what degree can you establish relationships, and having that spiritual capital specifically gives us such great motivation to enter into these relationships of true care for one another, seeking to serve one another. So I'm personally, I know Sarah is too, inspired by that kind of mentality. And you said it, abundance. That's what that leads to.
Amen. Amen. Yeah, we're a vessel of this energy, and I like to think of it as like it's my mission to leave a positive, lasting impact in the community and in the world. And my vessel is through investing in triple net commercial real estate.
Yeah, that's really cool. I know.
For sure. Well,
that I leave things a little better than they were.
Amen.
Well, thanks so much for your time today, Ben. I think it's about time to wind up. Yeah.
Yeah.
Sounds good.
Okay. So we really appreciate your time today. And, if you have other deals you want to get on and talk about, we'd be happy to do that. We love hearing about deals. And sometimes, you can't say the message enough, right? You know what I mean? So even if we hear from more people with triple net, I think the word will get across. So,
and I'll email you that summary of terms too. So we'll practice some law here a little bit on the internet. YouTube attorney.
I love it.
Yeah, that's only for Ben. Okay.
Sounds good. Thanks, y'all. I'm so grateful thank you so much.
Yeah, great. So thanks everyone for joining us today. We hope you liked this episode. If you did, please like and subscribe to our channel.
And remember, everyone, take aim with your alternative investing strategies.
Thanks. See you next time.